Welcome to the Crop Insurance Podcast. I'm Mike Rydell, a third-generation crop insurance agent here to make federal crop insurance less confusing and more useful. Whether you're a seasoned grower or just getting started, we're here to help you stay covered and confident in every season. Today's episode is brought to you by the Crop West Insurance Group, your agent-friendly crop insurance group. If you want more support, smarter marketing, and better tools to help grow your agency, Crop West's expert team has your back. Visit cropwestinsurance.com to level up today. Crop West Insurance is an equal opportunity provider and employer. Welcome to the Crop Insurance Podcast. I'm your host, Mike Rydell. Now, if you're watching us on YouTube, you'll notice that we've added some video functionality to help deepen your understanding of the concepts that we're going over. We're going to be adding different visual aids, graphs, and charts, and other fun functionality that you, the listener, will be able to participate in while you're watching on YouTube. Now, if you're tuning in on your regular podcast service and just listening to this episode, don't worry. We're going to continue to broadcast these episodes in audio format only as well, so that you can follow along while you're driving down the road or sitting in the tractor. Now, some of the people that we've talked to that listen to the episode use our podcast as a great sleep aid when they need to get to sleep. Now, while I am flattered that I do have a soothing voice that can help people sleep, I also am flattered by the other people that listen to the podcast episode and let us know that they are learning about the crop insurance policies and different functionalities of crop insurance from our podcast episode. So thank you so much for tuning in, and I hope that this video functionality will help deepen your understanding of federal crop insurance. Before we dive into today's episode, I want to make sure that you, the listener, are aware that we've updated our website at cropinsurancepodcast.com. Now, on this website, we've added different features and functionality that will complement this new video functionality to help deepen your understanding of the federal crop insurance program. A lot of the comments we got were regarding math formulas and equations that we do in the audio-only format, and that can be hard to follow along. So we're adding these different articles that coincide with our podcast episodes, as well as video and other fun functionality that'll help you learn more. Now, while you're at our website, make sure you go and check out our merch store. If you're a follower of the podcast and you want to help support us, check out the merch. You can get some fun t-shirts based on crop insurance policies that we took some creative liberties with, such as this No Barley, No Beer t-shirt. You'll find that on our merch store, so please check it out and support the podcast. Now, for today's episode, today we're going to be doing 5 real-life aha moments in crop insurance. They're going to give you some expert insights to help you be more successful in utilizing your crop insurance plan. None of these are involving new rules or new regulations that we're aware of. These are all part of the policy that are already there, but these are real-life examples that come up from the farmer's perspective that crop insurance agents have to deal with that are common enough, we wanted to go over them in detail. So out of the 5 that we're going to cover today, number 1, we're going to talk about growing season inspections. So what happens when you miss a winter wheat field when you're doing your spring acreage reporting and you find it? What do you do? 2, we're going to focus on new producer status. You added a new crop that you're seeding or you plan to seed in the spring when you added it at sales closing. Now you go to seed it and you want new producer status, but you had some uninsured crop that you reported to FSA that has production history. What do you do then? Number 3, we're going to go over bin measurements. Let's say that you have last year's production or just previous year's production in your bins and you're getting ready to harvest. What do you do in order to avoid complications when adding that new crop year's production on top of old year crop production? Number 4, master yields. Master yields are a beast. And I encourage you to go back and listen to our previous episode on master yields. But we're going to dive a little deeper into what happens when you actually apply for a master yield and all that's entailed. And last but not least, coming in at number 5, we're going to be going over malt barley, specifically the variety of barley you seed and getting it insured under the malt program or as feed, depending on what your variety is. What do you do if it's not approved by the American Malt Barley Association? So tune in, sit down, relax, and enjoy our episode.
I think I forgot to report this field. Now what do I do?
All right. We've all been there as crop insurance agents, and if you haven't been there, you will at some point. Your farmer's out there looking at their spring seeding, and they notice a winter wheat field that's not on their maps. So now what do? Well, in crop insurance, anytime you increase liability, where you add unreported acres, there's a series of protocols you need to go through in order to get those insured. So the first thing you need to do is just relax. If it's early enough in the season, you still have time to get those acres added as long as it complies with the rules. So what's going to happen is you're going to fill out a revised acreage report showing those acres that you missed. Now you're still going to have to go gather the FSA 578s, any maps that the farmer produced to try to figure out how and why those acres were missed. Now let's just assume that it wasn't the agent's error, that the acres just were not reported. If that's the case, you're going to submit that revised acreage report to your AIP, and then they're going to order what's known as a growing season inspection or a GSI. This is pretty common. A lot of agents know about this. Something new that I wouldn't say we learned this year, but a new scenario that we went through that kind of opened our eyes about the GSI, which is why we're adding it to this aha moment, is in order to get those acres added, it has to approve for 90% of the approved yield. So they go out in the field, they determine how many bushels or tons or pounds or whatever the measurement is for the crop you're using. And does it equal or greater than your approved yield times 90%? Now here's the key. It's of the unit. So they're not just going to appraise that one field. Now, if that one field's in a unit or an optional unit all by itself, they'll appraise it and you'll either be able to add it as insured or add it as uninsurable if it's below 90% of the approved yield. However, if it's part of a bigger unit, they're going to appraise the entire unit, all the fields in that unit, to see if they appraise for 90% of the approved yield. Now, what happens when you're an enterprise unit? This is one of those big aha moments this year that we went through that I really wanted to share. So because the way the policy reads, the entire unit needs to appraise for 90% of the approved yield. If you're in an enterprise unit or a whole farm unit, they're going to need to appraise the entire unit to see if it fits into that parameter. Now, if you're dealing with a large operation, that could be thousands of acres that they need to appraise. Now, if you want a pro tip on how to best handle this, make sure that your farmer meets with the adjuster from the AIP on inspection day and takes them to the worst spot on the farm or the fields that are struggling the most so they can start that appraisal process there. Because if the worst spot on the farm does not appraise for 90% of your approved yield, you won't be able to add the missed fields. So you might as well start with the worst and then work your way up to the best, so you're not wasting anyone's time going through thousands of acres of inspection when it's probably not going to get added. Now, if it does appraise for 90% of the approved yield, chances are you'll be able to get that added as insurable. They'll send out a revised summary of information, and away you go. Now, if they don't add it, you're going to have those acres on there as uninsurable acres, and any production harvested from that's going to be added into your total production for that unit, and those acres will not. So you can see how that could potentially take you out of a loss but you still need to report those acres on your policy so that you can track them for future use.
I am sorry, but it appears this policy no longer qualifies for new producer status.
All right, coming in at number 2, the new producer status. Now, this is one that's happened to us before as well. Back in the spring sales closing deadline, you have your farmer that wants to add a new crop contract to their crop insurance policy. Let's take canola, for example. They've never insured canola. They're thinking of seeding it in the spring, so they want to make sure that they add it to their policy. Very common. They get it added. You go over the coverage levels. Everything's great. Now you get to the spring, and they're going to seed that canola, and they're reporting their acres to you. Like any good agent, you went in and set up all your APH databases based on their unit structure. And like any good agent, you added new producer status so that they could take advantage of 100% of the county T yield. However, time goes on and you get a call from the AIP, or your crop insurance carrier, and they let you know that, wait a second, the insured did seed and harvest canola in previous crop years and had it reported to the FSA. A key note here on new producer status. It's not did they insure the crop in that county, it's did they ever plant or harvest that crop. So they may have planted and harvested some canola to try it out a few years ago, and maybe they didn't tell you about it. That production is going to be on file with FSA, and depending on how many years of that uninsured production they have, they may lose new producer status. Now, what do you do in that situation? Now, when the AIP calls you and lets you know that they have that uninsured crop reported with FSA, they'll let you know what year it is. You can then reach out to your insured to then gather that production info, including settlement sheets, scale tickets, bin measurements, any documentation they have on those uninsured acres to document that production. Now, if it's only 1 year, they'll be able to continue with that new producer status. But if we start getting into a 3rd year of production or 4th or more, they will not be able to utilize that new producer status, and that'll have a fairly significant impact on their approved yields. Now, if you don't want to do the legwork of gathering that production information for that 1 year that's missing, then the AIP will remove new producer status because you're failing to provide that documentation. So I encourage you to have that conversation in the springtime or in the winter when you're doing spring sales closing, when an insured or a farmer says, hey, I want to add canola to my policy. It's not, oh, okay, you've never insured it, so we're good to go. The next question should be, have you ever planted and or harvested that crop in any previous year? If so, we need to gather that documentation so we're ready to go in the spring when you go to plant that crop.
I wonder if I need to have this production measured.
All right, coming in at number 3 of your aha moments for crop insurance agents and farmers is bin measurements. So what happens when a producer has previous year's production in their grain storage? Well, this seems to be a little more common today than it did in the past. More farmers are holding on to their grain longer, whether that's due to commodity prices or the elevators not taking delivery when they normally did. There's a lot of contributing factors to why they would still have previous production still in their storage on site. Now, if this happens, it's not a big deal. If you get approval from your AIP to commingle your current year's production on top of the previous year's production. Now, a great time to go out and get those bins measured by a crop insurance adjuster is typically during the slow season. So maybe over the winter when they're busy doing audits and other paperwork and have time to come out in the field to do some on-site bin measurements. It's really tricky to get that done close to harvest as crop insurance adjusters are out doing hail adjusting and other adjustments on the farm. They might be busy and not able to get out there to measure your production. Now, why is it important to get that approval? Well, the reason it's important to get the approval for commingling your grain is if you store current year's production on top of previous year's production and it's not approved, when they go out to measure your grain bins, they can potentially include that previous year's production in your figures. So in regards to a potential loss situation that could adversely affect you and skew your production records, and there's a whole host or a domino effect that can occur if they end up commingling your production without approval. You could lose unit structure status. A whole host of problems can come up with storing that production of the current year on top of the previous year without approval. So I encourage you to reach out to your crop insurance agent, or if you are a crop insurance agent, reach out to your farmers and ask them if they have previous year production still on site, and go ahead and order an inspection to get that process rolling. So when harvest rolls around, they're not waiting on you to get an adjuster out there to do measurements, and they can just store their grain on site without issue.
I sure hope this master yield works out.
Coming in at number 4 is master yields. Now, if you have not listened to our previous podcast episode on master yields, I encourage you to go back and listen to them. What this is focused on, or this aha moment, is fully appreciating or fully understanding the amount of paperwork and documentation required to actually pull off a master yield. If you talk to any AIP underwriter and you mention that you want to do a master yield, you may get an audible sigh from them or a little bit of frustration or impatience on their end because they understand the documentation required for master yields, and not every crop insurance agent is organized enough to pull that off, and not every farmer is willing to provide all that documentation in order to make it happen. Now, if they're counting on that master yield calculation that you gave them earlier in the spring or the fall, depending on what crop you're on, you could have a whole host of issues if that master yield gets denied. Now, there's all sorts of rules involved, and we're not going to go into those today. Just go back to that previous episode. But just know that you could be essentially doing an audit on previous year's productions. If certain protocols are met or certain standards are met, they may require basically a full audit on previous year's production in order to prove that production. Typically, this occurs in a master yield when you have an excessive yield flag that comes up. So looking back in those previous years, you might have a unit that did really well, and maybe at the time it didn't get flagged for excessive yield. Well, during the master yield process, it will get flagged because that is very much helping your master yield that you're going to apply to all the units you seed. So that will result in essentially an audit on that production. And it's a lot of paperwork, and not just on the crop insurance agent side, on the farmer as well. So make sure that when you're going through all of that documentation or that conversation on adding a master yield, that you understand the level of paperwork and commitment it takes to get it done, because it is substantial. Now, if you get it all done, everything's submitted and it works out, then great. Master yields are a fantastic tool to use to help take advantage of your crop insurance policy and the different programs that it makes available.
I hope this barley qualifies as malt for crop insurance because I sure did seed a lot of it.
Okay, that brings us to number 5, last but certainly not least. Now, this is in regards to malt barley. Now, some of this is going to be about the Malt Barley Endorsement. Some of it's going to be about the just barley contract on federal crop insurance. And we're really speaking towards revenue protection with the Malt Barley Endorsement. But this is applicable to yield protection or revenue protection with the harvest price exclusion. This applies across the board to your barley. Now, under barley, you have to understand there's only a couple of varieties insurable on the contract with barley. The two that we're going to focus on today are feed barley and malting barley. Now, why is that important? Well, it all boils down to your approved yields and your history on your farm. So let's say that you have a farmer that's grown malt barley for multiple years. Now, they have databases set up for all their optional units, or whether they're in enterprise units, that doesn't matter. They have their APH databases set up and their history well documented. No issues there. Now, they go and seed their malt barley and they report their acres to you. And while you're discussing the acres, you're asking what variety of barley they have seeded. Now, when you're talking about the variety in this sense, we're not talking about feed or malt. We're talking about the actual seed type that they seeded. Because under the barley contract on the crop insurance policy, in order to qualify for malt, they have to seed a variety that is recognized by the American Malt Barley Association. So what happens when you seed a variety that's not recognized by the AMBA? That's what this is about. Now, let's start with the worst case of what happens. Let's say that you seed a variety that's not recognized, and Federal Crop says, okay, well, you cannot insure this as a malt variety. You need to insure it as a feed variety. Now, the reason this is a big deal is because then you're going to have to go into their APH databases to see if they have a database set up for that type of feed barley in that particular unit. So whether it's summer fallow feed barley or continuous crop feed barley. Chances are, if you have a producer that seeds exclusively malt barley, they might not have any feed databases on their policy. And now you're looking at a new database and potentially getting a fraction of the county yield as their approved yield. And that will drastically impact their crop insurance guarantees. So that's the worst case scenario. However, in crop insurance, there's a beautiful word in the contract with two letters, or. Because in the barley contract where it says it must be approved by the AMBA or contracted with a maltster. Now, I'm paraphrasing here. You can pull that up. We have it on our website, the exact verbiage. But if your grower happened to contract those acres with that unrecognized seed variety with a maltster as malt, guess what? Now they get to use the malt barley history on their policy when reporting their databases or their units. If they have the malt barley endorsement, now they're able to use that malt barley endorsement contract price and add it into the calculation to ensure at that contract price, which is going to be higher than the projected price assigned by Federal Crop. One key little takeaway on this one is just because they have a separate unit with this unapproved AMBA variety of seed, and they have a high contract value on that. And then over here, they have their quote unquote normal malt barley contracted with the maltster, and everything is normal. You're not going to be able to insure this with this price and this one with this price. You're going to have to take a weighted average of those contracts on all of your insurable acres, and then you're going to get a weighted average price for your projected price under the malt barley endorsement. Now, compared to the worst case scenario where they're doing a feed variety database with a very low approved yield, I'd say this works out in their favor. Now, if they don't have that contract and it's a variety of seed that is not approved by the AMBA, you're going to have an uphill battle to try to get that insured as malt barley. I do not know of a way to make that happen. So you'll want to check with your AIP and underwriters to see if there is a way. But if they have that malt contract, that's going to save the day and help them insure it as malt. From my family to yours, thank you for tuning in. If you found this helpful, please subscribe and share with a neighbor. Visit www.cropinsurancepodcast.com for more episodes, articles, and tools. For full policy details, always check the crop insurance provisions or speak with your local crop insurance agent. This institution is an equal opportunity provider and employer.